I remember clearly when we started, we were able to prepare cash book. We were able to prepare cash book. I want you to remind me, how many types of cash book do we have? How many types of cash book do we have? I want us to remind ourselves, how many types of cash book do we have? Cash book. This is what we were able to prepare. How many types do we have? How many types of cash book do we have? Don't let me down. Don't let me down. Don't let me down. Jacinta telling us to increase your voice a little bit. Okay, let me check my mic. Let me check my mic. Okay, have to increase my voice. Jonathan, is it now okay? Are you able now to hear me clearly? Are you able to hear me clearly, Jonathan? Good. I'm asking, how many types of cash book do we have? Daniel giving us 3. Daniel giving us 3. So can you name them? The first one, types of cash book that we have. One. Daniel, name the cash book that you are saying we have 3 types. Name one. I'm teaching you today. 2-column cash book, all right? 2-column cash book. Aha, 3-column cash book. 3-column. And I've seen people telling me single column cash book. Please. Petty cash book, Daisy. Daisy talking about petty cash book. Petty cash book. Petty cash book. Petty cash book. Now it fall. You know, when we are talking about the column, when we talk about the column, like for example, if I have 2-column cash book, if I have 2-column cash book, this is what you mean. 2-column cash book. 2-column cash book, whereby I'll be having, in fact, it should be 3 here. I'll be having 2 lines here, 2 lines here to show my demarcation. And this will be the debit side, and this will be the credit side. This will be the credit side. So I'll be having details here. Details here in the first column. This is my first column details. What will I be having in the second column? What should I write in the second column? What should I write in the second column? What should I write in the second column? Somebody? These people have forgotten. These people have forgotten. These people have forgotten. These people have forgotten. You can have cash and bank. Cash and bank. Cash and bank. I just want to remind you because this is important for you. This is important. Yes, particular. I can see somebody telling us particular. Particular and detail is the same. Don't confuse. Particular and detail is the same. Now, if I talk about 2-column cash book, this is a 2-column cash book. This is a 2-column cash book. Are we in agreement? Are we in agreement? Remember, our communication is just using Y for yes and N for no. Today, you're going to learn a lot. Are we in agreement that this is a 2-column cash book? Are we in agreement? Are we in agreement? Are we in agreement? Yes or no? Please, if you had forgotten, let it stick in your mind that a 2-column cash book have cash and bank. Cash and bank, or the other way, bank cash, depending with how you want it to be. But this is the first column, the second column. This is now the side of the debit. This is the side of the credit. On the right hand side, that is credit side. On the left hand side, that is debit side. That is where we came from. Hapo ndio tulianza. Hapo ndio tulianza. Although we had some introduction, right? We had some introduction. Now, for a 3-column cash book, welcome to our today's class for those who are joining. Now, a 3-column cash book. A 3-column cash book. Who can tell me who do we add in a 3-column cash book? Who do we add? Because we just add another column, which is the item. Which is the item? Wow, 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 wow. Discount allowed and discount received. Discount allowed and discount received. So for a 3-column cash book, it will be like this, but we add another column for the discount allowed and the discount received. Discount allowed and the discount received. Class, I'm just reminding you the basic. I'm just reminding you the basics. Good that you know that. From this, we were able to go and prepare some accounts. Some accounts. But before then, I showed you how to come up with a trial balance. I showed you how to come up with the trial balance, where I was reminding you of very important thing. I was reminding you of a very important concept here when we talk about trial balance. Trial balance. Trial balance. How many columns does a trial balance have? Today I said I'm teasing you to the end. I'm teasing you to the end. How many columns does our trial balance have? An ideal trial balance. Janet, I'm talking about trial balance. General Tobia Tatu, David Mbili. Okay, there's that column of detail, of course. There's the column of detail or the particular. So the trial balance structure look like this. Particulars, shike vizuri, and it has a debit and a credit what? A credit column. So here we are. Here we are. Here we are. Very important for you. Very important for you. You cannot expect to go to that exam. You cannot expect to go to that exam without the knowledge of this. Utapatana nazo. This is what you expect. You expect to be given a trial balance. Why? Because examiner wants you to prepare income statements. Examiner wants you to prepare what? Balance sheet. And you derive information or the detail from the trial balance. Still on the line of teasing you, I want somebody to tell me where should I put my excess here, because this is just an illustration. Where should I put my excess for revenue? In other words, I'm asking, do we debit or do we credit revenue in the trial balance? Acha nione the wise one. If you have been following our classes, my friend, Jonathan sema credit. Can I get several answers? Let me get several answers. Frida, credit. Revenue. Revenue. It's very important. Pass. Brian. I like there's somebody calling himself pass. You'll pass financial accounting. RCM. We also have RCM. RCM. I would like to know the RCM that we have here. So it is on the credit side. I'll give you the idea behind this. What about accumulated depreciation? In a tease kiram too. This one is teasing everyone. Accumulated depreciation. These are things that we have learned. Oh, how I pray that you continue being consistent in our free classes. Accumulated depreciation. Kumbuka EC depreciation. This is accumulated depreciation. So I want you to think I want you to think. Sasa watu wanataka kusoma, this is the time. This is the time. What does this stand for? You remember this familiar, dealer, this familiar. What does this stand for? Somebody? This is for somebody who we have been together from the time we started. What does this stand for? Drawings. E stand for expenses. My friend, ukienda kwa hiyo mtihani bila kujua hizi, and this is the basic of accounting. So I told you that all these, the drawings, the expenses, and all the assets, they have a debit balance. They have a what? A debit balance. Then we have liabilities. Liabilities. This is equity. All the equity items. We have revenue. Revenue, you people, you got it. You got it. And then we have accumulated. These are special one. These are special. Accumulated depreciation fall under that section. So our accumulated depreciation will be credited. Please note, I like putting it as dealer, so that this accumulated depreciation can fall here. So all these, they have a credit balance. All those, they have a credit balance. I wish I have a question. I don't know whether I'll be able to trace a question having accumulated depreciation. A question having accumulated depreciation for you to see that it falls under this section. I think I was teaching the financial reporting student, whereby we were trying to look at depreciation itself. And we were to open a T account for accumulated depreciation. Accumulated depreciation. Depreciation, debit and credit. If I ask you, where will be my balance brought down in that account? Where will be my balance brought down? Will it be on the credit or on the debit side? On the credit side. And that's why inakuja hapa. Balance brought down will be on the credit side. Balance carried down will be on the debit side. And that's why accumulated depreciation, it falls there. Now, in this account, if I want to get the depreciation itself, you find that if I have, for example, this is 20 and this is 15, you find now the depreciation is the one which will be balancing here by 5 depreciation. And that is the depreciation to affect what? The cash flow statement. So please note that accumulated depreciation, it has a credit balance. What if we say that we have, this is salaries and wages. And then another question arises. Salaries and wages, which side did we put our salaries and wages? Does it have a debit or a credit balance? A debit, Asante. This is an expense. And all expenses, all assets, all drawing, they have a debit balance. So hata hapa nikikuja niseme PPE, that's an asset. Inventory, that's an asset. So once you understand this, once you understand dealer, you are good to do this paper. Now, I want to ask you a question regarding this. When I say salaries and wages, and then on the other hand, I say wages, is it the same thing? Which is a direct cost and which is an indirect cost? If I say wages and salaries, which is a direct, I can even eliminate the wages here. I just say salaries so that you get to understand. Between salaries and wages, which is a direct cost and which is an indirect cost, that we shall articulate somewhere as we work on our today's thesis. If I say salaries and somebody else say wages, which one is a direct and which one is indirect cost. Debit, wages is a direct cost. Wages is a direct cost. These people are bright. I like this. Exactly. And that now take me now to show you very critical area. Something that you'll never miss in your paper. I want to direct you and to show you how you use something like return inward, carriage inward, carriage outward, return, those things, how do you treat those things as you prepare your income statement, which are very important. How do you treat the accrued? How do you treat the prepaid? Once you adopt and capture that concept, you'll be at a better position. The list here is address. The list here is address. And since I want this to be clear in your mind, from the trial balance is whereby we prepare what? ABC Limited income statement for the year. And then class, please. Please note the difference between the income statement and the balance sheet or statement of financial position. When writing the heading, we find that when marking, we find that some students are writing for us here, ABC Limited financial statement, statement of financial position as at, or income statement for the year as at. You see, for the income statement, it's prepared for the year ended. For the financial position, it is prepared as at. Remember, it is just a snapshot, as at that date, a snapshot. But remember, for the income statement, there are transactions which has been happening throughout the year. There are transactions which have been happening throughout the year. Where do we prepare income statement? Who's the purpose of preparing income statement? Somebody? Who's the purpose of preparing income statements? Why? Who do we want to ascertain? Why? No, you can be preparing, but you don't have the objective. Can see somebody is typing. Good. Let's wait for them. Why do we prepare income statements? That's a very simple question for you. And as we said, always care the examiner to know the transaction of the business. Asante, Daniel, Asante. Remember, the purpose of preparing the income statement is for you to ascertain the profit of that company. Remember, we have a section of income, and a section of expenses, operating expenses. We take the gross income minus what? Or the total income minus the total expenses to arrive to our net what? Our net profit. So the purpose of preparation of the income statement is to ascertain the performance of the company. Are we operating at a loss or are we operating at a what? At a profit. We have another reason here from past, help investor in making decision. Yes. That's why you find that there are some of the statements, published financial statements, of course, you find them in those gazettes and such. They are gazetted to help the investor to make informed decision whether to invest in that company or not. Of course, you cannot invest in a company which is making losses. Find that below there, after you have your total income, less your operating expenses, at the end you're getting loss. Can you invest in such a company? You cannot. You invest in a company that we know it has a very nice base. It has a very nice base. It's a stable company. A stable company. Before we continue, I'd like all of us, the 21 of us, to confirm whether we are together up to that point. Confirm whether we are together up to that point. For those who have just joined, use just Y for yes, confirming, and N for no. This for no, this is for yes. Are we together up to that point? The 21 of us, 20 of us. Wow. Thank you very much. That confirmation means a lot to me. Now, class, I want to give you a very light and a well elaborated information on how you should prepare your what? Your income statement. In your paper, expect this, by the way. Whatever that we are going through, expect. There's no miracle. It's just understanding. Just understanding. Assume I'm told to prepare the income statement. Say, the company has sales. The company have made sales. We made sales. We got money. Okay, we can have it as revenue. Sales stroke revenue. I can as well come here and say revenue. No worries. And now you have the picture where you get that from the trial balance. You have the picture. Where you expect to see what? Sales or revenue. I want somebody, a good student, our good student, our good student, to tell us what may reduce what we sold. Ukishika hii leo, you'll be at a good position to pass this paper because you expect, yes, kutakuwa na ile swali ya manufacturing and so on, and the concept apply. So I want somebody to tell me what will reduce our sales. What might reduce our sales? A bright student here. We made sales to corner revenue. I can hear you. This is our. You cannot hear. Oops. This is my. Can you hear me now? Am I audible now? I talking now. I think I just touched somewhere. Sorry for that. Good. I have seen somebody answered. Amesema return inward. Pasa anasema courage outward. Hizo terms ndizo nataka uelewe leo. You will never do what? You'll never be confused by those terms. Courage inward, return inward, like that. Now I'm asking, what might reduce our sales? We sold. But the customer was not contented with what we sold to them. They returned. What happened to our sale? Budget. Okay. What will happen to our sale? Our sales will reduce. So for us to get net sale in this, we have to raise return inward. Or sales return. Allow me to call them sales return for you to understand. Sometimes the examiner may give you terms which will confuse you. Sales return. Sales return. Easy, customer tulimuuzia, lakini probably the quantity was not right. The quality was not okay, and they have returned to us. Ama tunafaa tumfukuze nazo because we had already sold. Okay, there are those people who say that good ones sold are not in business. Don't go with that. Maybe the default is from your end. So you have to do what? Sales return ambition. And this one reduces our what? Our sales. So we shall be having our net sales. Our net sales. Good. Remember, we want to arrive to our net profit at the end of the day. Therefore, we have to less cost of sale. Less cost of sale. I'm sure at your level, since the examiner wants you to understand the concept of accounting, the basics of accounting, at your level, you cannot be given cost of sale direct. By who? No one will give you cost of sale direct. And therefore, you should be very vast with how we arrive to cost of sale. Can somebody give me one item that I should write here? Somebody to give me one item that I should write down there. Cost of sale, we want to arrive at cost of sale now. A bright student, transportation, Asante Gelono, Asante. Whatever Gelono is saying, is right. It's right. But now there's a name that we shall give that. Courage. Aha. So we start with, okay, we go systematically. We start with the opening inventory. Opening inventory. Inventory. Unakuja unafanya nini? Unaiandika hapa. Hiyo haina adjustment. Haina any adjustment. Haina any adjustment. I can see Jonathan atuambia carried outward. Ataziona. Should be very keen on this. Should be very keen on this. Hizo kwanza hizi macarriage hizi. Carried inward, carried outward. Should be very keen. By the end of the session, you'll have known how we do what. Thank you so much, Joshua. Thank you so much. Add purchases. Add purchases. Add purchases, and then purchases, allow me to adjust it here because it has something else to adjust on purchases. And you people, I can see you have the concept, but you don't have the right name to use. The right name to use. What else shall I add here? Aha! Now I can see we are sailing at the same boat. We have to add what? Courage inward. Ile pesa, ile cost tulitumia kuleta hizi goods. Ile cost tulitumia kuleta hizi goods hapa, ile cost tulitumia, ndio tunaitaka what? Courage inward. Ili hizi goods ziweze kuingia, kufika kwetu. Courage inward. Asante. Ocheng. So, whatever that I be having here is my total what? Total purchases. Let's return outward. Hey, this is nice. This is net purchases or maybe gross purchases. Allow me just to put less return outward. Oh, hata sisi kuna goods zimekuja outward. Taka muangalie hizi term vizuri. Kuna goods zimekuja, but maybe the goods were not in the right quantity. The quality is not the way we expected. Maybe the texture, you see? So we have to return it back to the supplier. So you less. Return outward, you less. Which name shall we give our result here? Which name shall we give our result here? Before we less. Asante Ocheng. Which name shall we give our result? Cost. Net cost of. Jelona atuambia net cost of sales. Net cost of sales. Net purchases kwanza. Before then, ili tukuje hapa. Tunapata net purchases hapa. Net purchases hapa. Sasa sindizo hizi tushatoa. Tupate hapa. Alafu sasa, with that, we can do what? Net purchases. Tunaona cost of goods are available for sale. Sasa unajua tumebakisha, tunaweza kuja hii net purchases yetu tunaweza ileta hapa hata. Naweza ileta hapa hata. Naweza ileta hapo. Naweza ileta hapo. Hiyo whatever. And then we less what? We less the closing inventory. Closing inventory. No. Before then we have COGS. You have COGS. COGS hapa. COGS. Tunaitaga COGS, cost of goods available for sale. Unaweza ita hivyo. Unaweza ita hivyo. And then we less what? Less closing inventory. Less closing inventory. Tafadhali. Closing inventory, hii usisahau kwamba huwa tunatoa. Watu wengine huwa wanaweka hapa. There's something here that we found that most students, you know what you're doing, but you forget that when you say less here, unasahau kukuja hapa ku less. Umesema less hapa. So I prefer to use bracket. I prefer to use bracket, or I advise students to use bracket, because when you say less here, you forget to put a bracket here. You find yourself adding. Nani ashajipata kwa hiyo shida? Who have gotten themselves in that problem of, instead of lessing, you just add it. Now you find that whatever that you'll be getting here, it will be totally different. To be totally different. Therefore, in this case, I advise you to use a bracket to show that you are subtracting. So in this case, I subtract this. I subtract this. And then I get whatever that people are telling me there. I'm getting what? The cost of sale. Cost of sale. Now, what do I do to my cost of sale here? What do I do? I less the cost of sale. I less the cost of sale to get what? To arrive to my gross profit. Sasa kuna point nataka ushike, that for the carriage inward you add, for the return outward you less. Carriage inward you add, for the return outward you do what? You less. What about carriage outward? Carriage outward. Tuko na hiyo pia. Carriage outward. Carriage outward. What do we do to that? How do we treat that? Class nakwambia ukitoka hapa, you'll be in a position even to teach someone. You'll be in a position even to teach your fellow colleague. What do we do to the carriage outward? How do we treat that? How do we treat that? It is an expense. Asante Ochieng. Asante Celestine. Asante. 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 And you people, you should eat a lot of fish. Huh? You should eat a lot of fish. And omena. And omena. And omena. They'll help your brain. They'll help your brain. They'll help your brain. You'll not forget much, right? Wakati mwingine unakuta kwamba, yeah, surprise is plenty. You see we have a cod here, direct from the lake. You just organize and you get fish. Omelette. So we also have, do we call them omelette? You eat those things. And you find those omega-3, those oil. Use them daily. You should. Because you find that during exam, people scratch their heads very much. They scratch their head very much because of something very small. They have just forgotten carriage inward and carriage outward, how they should treat it. They just scratch their head. They scratch their head. Sometimes you can even find the hair is pracky. White meat. Pasa anatuambia na pass wewe nataka upite. Unaona umeweka pass. Unajua mtihani utagoja tu vitu mbili bwana. Sasa pass wewe ushaamua. Ushaamua. Taka upite. Taka upite. Bwana ukipata hii, una feel kama unaweza faint. I know. For you to recover, it take 1 week. Some people it take a month to recover. It's not a joke. But if you are doing this for the first time, don't get scared. Don't get scared. Don't get scared. If you're doing it for the first time, make sure that you are listening to what we are saying now. All right. Now, when you have your gross profit class, please, please add other income. Add other income. Don't forget to check from your trial balance, check whether you have other income. Check whether you have other income. For example, can you give me one item that it fall under other income? Kama niwaanzie investment income. Mpatie ingine. Utazipata na nishawaelezea why you get the income, right? I've just told you. The income revenue, hizo stuff unazipata on the credit side. Any other item? Give me one, give me two, we proceed. Give me two. Discount received, asante. So this one, I just put it there. Then we have discount received. Sasa wakati mwingine ilikuwa inasumbua watu jameni. Unajiuliza discount received, discount allowed, unaanza sasa kujiweka kwa hiyo state ya if I'm the businessman, I receive discount. My friend, you'll confuse yourself. You'll confuse yourself. Profit on sale of assets. So if you had some profit on sale of asset, probably it fall under investment income, then nilikuwa nagoja hii. Ndio maana nawaambia mkule omena na mkule samaki. Ukitaka kujua vizuri, ulizeni Celeste. Hata si tulikula hizo vitu wakati tulikuwa huko hizo shule za huko. Interest commission like that. Decrease in allowance for doubtful debt. Decrease in allowance for doubtful debt. Commission like that. Sitaandika ingine. Commissions like that. So that you get your what? You get your total income. Kuna vitu zinasumbua watu hapa but zinakuwa rahisi sana. Then class, after you get your total income, you go to operating what? Expenses. Remember, I had asked you about the wages and salaries. So if in any case you have some direct cost, kama wages, kwa inakuja hapa chini. Tafadhali. How does commission come to that category? Commission, or it can be commission received. In that, David Asante, a very nice question. Commission received. In another way, on the other side, you can have commission paid. It can be an expense. Are we together, David? Are we together? Tuko pamoja. Quickly write Y for yes and for no, then we proceed. Then operating expenses. Operating expenses. We start with the carriage outward. Usiwahi sahau kwamba carriage outward, it fall under what? It fall under expenses. Then we have rent, salaries, insurance. Sasa, class, allow me to adjust insurance so that I explain something. Allow me to adjust insurance so that I'm able to explain something. Insurance, I just put it there. And then there is prepaid insurance. Somebody tell me, how do we treat prepaid expense? This now prepaid. We had prepaid insurance. Should I add it to the normal insurance or should I erase it? Prepaid. Very important for me. Pass. Exactly. Anything prepaid, you erase it because that means it will be offset in the next period, financial year. It will be offset in the next financial year. Therefore, as we are preparing our income statement, we just deal with what? With that income, with that expense at the end of the period. Therefore, we shall be having net insurance here. Net insurance here. Naeka hapo. Then we can have give me another expense here. Give me another expense. Electricity. Electricity, allow me as well to adjust. I have accrued electricity. What should I do? Electricity. What should I do? to the accrued, depreciation as well. For this one, we usually add. Accrued, you add. Accrued, you add. Please note, fuel gas. Right, watu wanakumbuka kama siku hizi sasa watu waende kwa green energy. Green energy. Electricity imekuwa expensive sana, depreciation. But class, remember, for the depreciation, it depends with the asset that you have, right? Non-current asset in that case. So you'll be provided, you'll be told that depreciation for the PPE is 2%. Depreciation for the PPE is 2%. If the examiner give you the accumulated depreciation and then tell you that you use the reducing balance method, I also thought that concept is important for you to note. For example, tumepewa PPE. Sasa sijui kama mko na calculator, mtatumia simu. PPE, accumulated depreciation, ini cost, probably, accumulated depreciation. Umepewa maybe ni 1,000, and then the rate, the provision, the rate of that year, the rate of depreciation of that year is 2%. And then you are told to compute depreciation using the reducing balance method. Tafadhali, hivi vitu mtapata, bwana. Hivi vitu mtapata, this is what you expect. You use the reducing balance method to compute this depreciation. Class, this is what you do. This is what you do. Anytime you hear of the reducing balance, you first of all have to less the accumulated depreciation from the cost. Like for example, in this case, what will be my net if I less accumulated depreciation? It will be 1,300. 1,300. Now the depreciation for you to record, it will be 2% of the 1,300. What is 2% of 1,300? What is 2%? What is 2% of 1,300? That one you can use your phone. 2%, maybe 0.02 times 1,300, 26. 26 is the depreciation that you're going to record here. 26 is the depreciation. Sijui kama mmenielewa. Have you understood that concept of computing depreciation using reducing balance method? Have you understood? Because utakuta examiner anataka utumie reducing balance. Daniel bado, I'll come back to that. Examiner can tell you to use reducing balance method. On the other hand, examiner anaweza kwambia tumia straight line method. Straight line method sasa, we ignore this. Hata kama wamepeana accumulated depreciation, you ignore. So you compute depreciation on costs. So if I were to use straight line method, you could have just taken 2% of 2,300. How much are you getting? 2% of 2,300, somebody? 2% of 2,300. I expect Daniel to give me this. 46. Now I could have recorded 46 if I were to use straight line method. But for the reducing balance method, tafadhali. For the reducing balance method, tafadhali, you are going to use to take the cost minus accumulated depreciation, Daniel, tafadhali, cost minus accumulated depreciation of 1,000, and then the remaining, the net cost. The net is the one you find the depreciation for the year. Depreciation for the year. Depreciation for the year. Please, usianguke mambo na depreciation. Ati juu examiner amesema asijui reducing balance. Aje sasa. You first of all eliminate accumulated depreciation. Are we together, Daniel? Are we together? Daniel and any other who had not understood that concept? Are we together? How many of us are in our ongoing classes? How many of us are in our ongoing classes? How many have not joined? Our ongoing classes? You can see our time in Aisha hapa, but I have some good news that I can share with you. Daniel akona sisi, asante. So sorry for those who have not joined us, please, you can reach our customer care through this number. Can give you this number. Can give you this number here. 0793 5500. Alternative rate is 719 525,000. Have not. I mean, Jelono Akondani Asante. Janet Badu. Janet. According to what we have done, would you wish to test such? Would you wish to test such? How is it? If you are to comment, is it adding value to you? Is it adding value? Ah, wow. Janet confirming that it's really adding value. It's really adding value. It's really, David anauliza which topic? Yes, asante Y9, asante. So, of course, we are at half of the semester, therefore, ni kama tuko half the syllabus, but you get the previous recording. You get the previous record. That's the best part. You get the previous recording, and therefore, you just organize yourself. Jipanga pange. I think you can go with the offer. There was an offer. If you are retaking, there was an offer. How can you? You'll get them. You get them. There was an offer of 3,200. That is for the retake student, but the rest you can pay 4,000. And then upate video zote like that. Wish to join section 5 and 6. And na Janet ukumbuke siku hizi atuziti hivyo, atuziti section sawa. Hii ni level 3, level 3, foundational level, intermediate level, and what? Advanced level. So class, I can see we having our time is up. I would have wished to continue, but our time is up. I know some of you want to go back to work, and that is okay. We must build the country, and I wish to stop it at that point, unless there's a burning question. No problem, Janet. You can as well join. If you say 5 and 6, I think that is now what we call the advanced level. So feel free to read. It's a pleasure hosting you. All right.